Do you want to start investing in Nigeria but don't know where to start? Or maybe you are just afraid of losing money? Well, in today's video, I'm going to show you legitimate options where you can start investing as little as 5,000 Naira. And yes, some of them pay up to 20% interest. Welcome back to my channel. If you are new here, welcome. They call me Prudent Mom. I'm an accountant with 15 years experience in investing. I have invested in anything you can mention. Any legitimate ways to grow my money, I've tried them all. So stick with me till the end and I will show you legitimate places where you can invest your money, and I will tell you the minimum investment, the risk involved, and how to invest this money. So let's get started. At the top of my list, I will start with federal government savings bond. Federal government savings bond is a way that government borrows money from citizens and is backed by the full faith of government, which means the risk is very low because the government will not like to default and risk their credit worthiness. The federal government savings bond is one of the lowest risk investment because it's backed by the full faith of Nigerian government. What this means is that Nigerian government will not default. They will not fail to pay you your money because they know that this will stain their reputation. Currently, the rate of federal government savings bond is between 17 to 18% as of this month, and the minimum investment is 5,000 Naira. If you want to invest in federal government savings bond, it's easy. You just need to go through research and find out which of the platform you want to use. That's the stockbroking platform. When you register, they will then create your account for you and give you a CSCS account. They will provide an account where you can pay in this money. And the good thing about it is that you can start with as minimum of 5,000 Naira. And you have the option to invest for 2 years and 3 years. So that is why this one top my list, because of how long it can be. And you can start with, like I said, 5,000 Naira. The second one on my list is Treasury Bills. Treasury Bill is a little bit different from federal government savings bond. Although there is government that will still borrow the money from citizens when it comes to Treasury Bill. But then the Treasury Bills is only for 3 months, which is 90 days. Then they have for 6 months. Then they have 1 year. So for Treasury Bills, the rate is different based on how long you want to invest. But right now, the rate is not all that impressive. It's about 17%, but it's safe. It's backed by the full faith of Nigeria government, which means your money is safe. The only drawback when it comes to Treasury Bills is the fact that you have to invest with minimum of 100,000 Naira. Okay, the good side of Treasury Bills is the fact that when you invest 100,000, the federal government, once your bid is successful through your bank, the government will not take the entire 100,000. They offer what they call discounted rate. Discounted rate means they will give you your interest in advance. What this means is that when you invest 100,000 Naira, they will take 83 and leave 17,000 Naira for you. So that 17,000 Naira will be your interest. So at the end of 10, or let's say when it's 1 year, then they will credit you back 100,000 Naira. So if you want to know more about Treasury Bill, you can watch another video on that. I have a video on detail on how to, make most of your Treasury Bill. So that's the good thing about Treasury Bill. It's backed by the government, and you get your interest ahead of time. And the minimum investment is 100,000, and you can even invest it for as short as 91 days or 1 year. Treasury Bills is very low risk. That means the risk is very low since it's backed by the full faith of Nigerian government. The third on my list is money market funds. Money market fund, the managers pull money from a lot of people. That's you, me, and another person. They join this money together and they invest it in things like Treasury Bills and commercial papers. They invest it in this and then they pay you your interest. Some credit your interest in your account every month. Some do it twice in a year, quarterly or monthly. So it depends on the fund manager you are using. But the good thing about a money market fund is that the risk level is low because the underlying asset is Treasury Bills. The underlying asset means what they invest in is treasury bills and the commercial paper, which is, let's say, low risk as well. That reflects why money market fund is low risk. When it comes to mutual funds, there are so many types. Like for instance, if you want to invest, if you are earning in dollars and you don't want to change your money before you invest it in Nigeria, you can check out some of the dollar funds we have in Nigeria. We have a lot of dollar funds, but you really need to do research. You really need to check well, because some of them have a really high risk profile, which means some of them there's possibility that you will lose money. That's dollar fund. But money market fund is really low risk. I've been investing in it for years and I have never lost any money. I've been investing in treasury bills for years. I've been investing in savings bond for years, and these investments are one of the safest so far. Although I have to mention that when you are investing in money market fund, you have to check, go to Security and Exchange website and find out if the platform you want to use, if they are well registered by Security and Exchange Commission. Once you are done searching, once you are done checking through the platform and you find the one you want to use and you are sure that they are registered, then you just need to, create an account. Sometimes when you have all the information like NIN, BVN, and just the basic information you need to create a bank account, if you have those information, you can use it. Once you choose a platform you like, you can use that information and then create an account and you can start investing. Minimum investment in money market fund is 5,000 naira and is for people with low risk appetite. And currently the rate is quite high. It's between 20% to 23%. Yes, you heard me right. It's very high right now, so you can take advantage of it. The fourth one is Nigerian stock. Nigerian stock can boost your money, as in it can give you dividends and it can appreciate, as in the stock price can appreciate. Maybe if you buy a unit today, let's say for 100 naira, tomorrow the price can change to 200, but it's very volatile. What I mean by is volatile is that it's very unstable. You can buy a stock today for, let's say, one for 100 naira, and you can wake up in the morning, refresh your computer, and you will see that it's already 20 naira, which means if you bought, like, let's say 100, that's a lot of money you've lost. So the thing is, before you invest in stock markets, you have to make sure you have a high risk appetite. Don't invest in stock market if you don't have a high risk appetite. I did one video where I mentioned how, because I myself, I have a low risk appetite, but I still invest in stock because I invest the money that are disposable. You know, that kind of money that you can give someone that is asking for urgent 2k, and here, so you refer it as if you are giving somebody urgent 5k. You put it there just, to start diversifying your portfolio. But don't put a lot of money if you know you don't have a high risk appetite. Stock, you can start investing with any amount of money you have. And a lot of platform in Nigeria, you just have to register a stockbroking account. If you have one with a bank where you already do bond, then you can as well start the stockbroking with this thing. But remember, it's very volatile. That means the price can go up and it can come down. And dividends, some pay dividends and some don't. So if you are interested in dividend paying stock, I made a video on that. Another thing you have to know about stock is this: when you buy a stock, you are buying a share bank, a piece of a company. Let's say you are buying a piece of First Bank, for instance, or a piece of Dangote Cement. So, and when they make profits, some of them will share it in form of a dividend. So it depends on how many stock you have. They will share it. Okay, let's say it's 100 stock. So they will give you maybe like 10 naira per one. Oh, you understand? 100, if you have 100 share, they can give you 10 naira per one. So that is what stock is all about. Now, let's move on to the next one. The fifth one on my list is called ETF. The full meaning of ETF is exchange traded funds. They are traded like stocks in stock market. The only difference between ETF and stock is the fact that stock is just for one company. That's just one company. When you are buying stock, you are buying a share of one company. Maybe let's say, like I mentioned before, Dangote. But ETF is a different thing. ETF when you are buying ETF, if it's ETF that deals with stock, then you are buying like 30 stocks, like NGS 30, for instance. If that means you are buying Dangote, Zenith Bank, First Bank, like a lot of stocks at the same time. Some of these ETFs, they pay dividends as well, and ETF is a little bit safer compared to stock. The reason is because ETF, when it comes to ETF, let's say you have a bank A, under the stock, on bank A is having issue, it will, there is problem, the money you invested in ETF will spread it, because apart from the bank A and bank B, there are so many other banks. So if bank A is losing money, bank B will be making money, which means the profit from bank B is may possibly cover the bank A, because you have a lot of stock. It's a basket of stock, because you have a lot of stock in one ETF that you bought. The risk is a little bit lower, but that does not necessarily mean that it's safe. ETF is still not for low risk appetite like that, but it's better than stock, buying stock directly. We have different types of ETFs. We have the one that invest in bonds and commercial papers. We have the ones that invest in bank shares only. We have the ones that invest in company that is into production of goods. We have the ones that invest in just, let's say, maybe top 30 stocks in Nigerian exchange. That's Nigerian Stock Exchange. So the thing is, when you are buying, you have to read what they mirror. That's what they cover. It's just like when you say this mutual fund is investing in treasury bills and commercial paper. That means that's their underlying asset. So when you talk about ETFs, different ETFs exist. Some invest in gold, while some invest in, like I mentioned, bank stocks. So you need to know the kind of things they invest in before you proceed with ETF. ETF too is not like it's 100% safe. I mean, no investment is 100% safe, but some risks are lower than the rest. So this ETF is still a little bit lower compared to investing in stock directly, but so is their interest. So sometimes the gain may not be as high as stock. So you can do further research on this before you even consider investing, or at least consult a financial advisor. So the sixth one, another place you can invest as a beginner, is all these fintech companies that offer high rates. There are some of the companies that allows you to invest based on how much you spend. For instance, if you can set it in a way that if you withdraw 10,000 today, they will take 1,000 from your money, and at the end of the day they will be gathering the money. Some you can set it some minimum of like 500. Once you withdraw 500, they will take 500, and they give good rates too. Some of them give interest, even that is like federal government's treasury bills or federal government savings bond. So if you get a fintech app that is good, that is registered, that is recognized, and you know that the brand is strong, you can as well start investing there. You can decide to gather money like that. Maybe when you take 100,000, they can take 5,000 from your money. And then when you see that the money they have pulled from you is big, then you can go ahead and even invest in it in treasury bills or whatever you like. But that's another way to save money, and then some of them already give good interest, so you may not even want to move it away from there. Most of these people, the minimum investment is 1,000 naira. The risk, I can't say is 100% safe, because no investment is 100% safe, but at least most of them are licensed, which means it's a little bit monitored. So you need to make sure that the one you are using is well, registered, and everything is good before you proceed. And you can start, like I mentioned, with just 1,000 naira. Many are insured by NDIC or moderated by Security and Exchange Commission and licensed by Security and Exchange Commission. So you should watch out, make sure everything is okay before you proceed. The seventh place you can invest as a beginner is in US stock. I have to mention though that just like Nigerian stock that comes with risk, the US stock too comes with a lot of risk. And it is even riskier, because if you are not careful, you choose a platform that is not that there is no guarantee that if anything happens to that platform that you ever trace your money. Remember, we are in Nigeria. But if you earn in dollars, I've already mentioned dollar fund, where you can invest in dollar and earn interest in dollar. Although it's high risk, but the difference between that and this US stock is the fact that the companies that do these dollar funds, some of them have a low risk investment. Some of them invest in Nigerian Eurobond, government Eurobond. So in a way, that one is a little bit safe, just like a government Eurobond. Just the way government Eurobond, where the security stopped, that's where that one too stopped. Then the US stock, you really need to investigate the platform. So it requires a lot of research before you choose a platform. Not every platform, not because people are choosing this platform and you decide to go into it. Some of them, you have to ask them questions. The question I usually ask before investing in this US stock is that you ask them, what happens to my money if anything happens to your platform? People don't usually ask this question. They just see that people are investing in a US stock and everybody will rush to the app or something like that. You have to make sure that you know that your money is insured or something like that. But US stock is one of the fantastic places to invest money for people with high risk appetite, because you have stock, you have ETF, you have many things. You can invest in S&P 500. So it's a lot of things, but make sure you do your investigation. If you are earning in dollars and you want to invest in dollar, another place you can invest if you have a huge capital, you don't know what to do, is federal government Eurobond. Eurobond, you can invest up to $200,000. But if you have $100,000, I believe they will accept if you want to buy directly from the federal government. And the rate is not bad. Although there are some risk that comes with Eurobond, because there's possibility that the rate will fluctuate. But anything go federal government, so far, Nigeria government, they hardly disappoint in this kind of thing. And look out, if you earn in dollar, look out for another thing. There's what we invested in recently, call it federal government domestic dollar bond. Minimum is $10,000, but the interest rate is out of this world. Is 9.75%. Since I started investing in dollars, I've never earned such interest. When they paid the coupon a few months ago, I was shocked, because that's the first time I'm receiving that kind of coupon. Anyway, so as a dollar earner, or you want to invest in dollar, you have a lot of money, you can either invest in Eurobond, which is a minimum of between 100 to 200,000, and you can invest with all this dollar fund. Some of these dollar funds have a Eurobond as underlying assets, or you can invest in US stock. But like I said, make sure you do your research well. Now, let's quickly summarize the key risks and how you can manage them. Number one tip is, don't invest everything in one place. If you have to, you can get up to 2 fund managers. Split your money. You can invest some in mutual fund, invest some in Treasury Bills. Just split it. Make sure your money is never in one place. That's number one way to minimize and manage risk. Then the second tip is, know your financial goal. Set some money aside for emergency. Then invest the money you can afford to live for a while. Which brings me to number 3. Plan for a long-term investment. Don't invest today and withdraw tomorrow. The transfer charges and everything will take up the interest you make from the money. Make sure the money you are investing is not something you can take like that. Like I mentioned, that you should save up some for emergency fund. Make sure the money you can leave it at least minimum of 6 months, because some of these platforms, when you even withdraw before that, they will take some of your percentage, which at the end you will not gain anything. Then another tip I have for you is, don't wait until you gather the whole money in the world before you start investing. Start with that 5,000 naira in your account. Start with it. You are not starting with 5,000 because it's going to change your life, no. But when you start with it and start topping it up, whether monthly, whether weekly, whether yearly, or whatever it is, you have started. The most important thing is that you have started. The next tip I have is, only invest in what you know. Make sure you research properly before you invest in anything. Make sure and if you have to ask questions, I'm here. Leave the comment down below. If I know it, I'm going to tell you. Leave the comment down below any question you have, and I will try my best to respond as soon as I can. Another thing is watch out for platform that promise too much money. When a platform is giving you 80% in 2 weeks, watch out. That's one of the red flags you should know. Everybody want to make money, but don't let the interest pull you into losing money, like things like MMM. You see what happened during MMM. Paid some people, and then because it's a pyramid scheme, it stopped eventually. So if it sounds too good to be true, it probably is. Don't fall a victim. If you think this video was helpful, please give it a thumbs up and hit that subscribe button and the notification bell, and leave a comment down below. Let me know which of the investment you think you will try first and why. Thank you so much for watching. Catch you in the next one. Bye.